How's it going everyone, Mario here. In this video we're gonna cover the analysis of S&P 500 and Nasdaq. We will also go over what to expect leading into next week, especially with CPI data around the corner. Now, we had this jobs data last week. Whoa, it's a strong data, no recession. Let's dive a bit deeper and see how things actually are. The number of people employed part-time for economic reasons increased by 303,000 to 3.9 million in July. This rise reflected an increase in the number of people whose hours were being cut due to lack of work or due to the business conditions in itself. These individuals who would have preferred full-time are now forced to work part-time because their hours has been reduced or they are unable to find full-time jobs. Interesting. There is a reason why these non-farm payrolls are considered lagging indicators. If we dig deeper and take a look at the hourly wages paid, in July, the hourly average earnings for all the employees on a private non-farm payrolls rose by 15 cents or 0.5% to $32.27. Oh Mario, people are making money, why are you bitching about it? If you factor in inflation, this is nothing. You're still getting your ass slapped because of inflation. Also, if the economy is slowing down, earnings growth are slowing down, how do you think these companies can afford to keep up with these increasing wages? When these asshole corporations want to increase the prices of their products, well, yeah, they will do it with their blindfolds on. But if you want to pay your employees more, no, we don't talk about that now, do we? What a bunch of fucking assholes. Also, the inflation in the wage side puts more pressure on the Fed to go heavy on the rate hikes to cool down the labor market and to cool down the inflation. We are also getting CPI this week. The worst case scenario for Fed will be getting a hotter than expected CPI with the already hotter employment numbers. They will be forced to go big this time for 100 basis points if it happens. But if inflation slows down a bit, there is a possibility of a big mistake from Fed similar to the one which they made during 1970s. Knowing these assholes for a while, I won't be surprised if they reduce the pace in increasing the rates because they might start to believe the inflation has been peaked. The market will jerk off to it in the shorter time frame only to realize later that they are wrong again and they are behind the curve again as they are making their decision based on the data that is lagging. It's going to be a fun ride ahead, but not in a good way. Let's go over SPY and QQQ now. We had a pretty decent week on SPY. We held 407.50 as support and closed above the 100 SMA not only on the daily at 410.76 but also on the weekly at 412. We are still in the zone of 407 to 416.50 which we had on May 27th to June 8th. Until this range is taken out and we start closing candles above 416.50, expect a range-bound session from the markets. If we do push higher above 416.50, watch out for minor resistance at 417.39. If we break above it, watch out for the big fat round number at 420. We do have the anchored VWAP from year to date is sitting right at 422.63 to 424 zone. If we break above 420, this zone will be the target. But what if we break down below 407.50? What's the bear case scenario? So it is pretty common for the market to come back to run a test to the previously rejected spot which will be now acting as support. So if you look at the chart, what happened on July 22nd, we ran a test to 400, got rejected, came back down all the way to 390. So now that 400 area, the rejection zone, on the way down will be acting as support. If we do break 407.50, I won't be surprised for the markets to come all the way back down to near 400 to run a test to that breakdown area. If we do break under 400, watch out. Things start to look a bit weak from a technical side at least. So before we move into QQQ, check out the description for joining our Discord community. If you want to support the channel, you can check out the Patreon as well. We have experienced traders in there which will help you to get a great insight on the broader markets. Check it out, link is down below in the description. Now, moving on to QQQ. Unlike SPY, QQQ is already above that consolidation zone. Watch out for 319 for support in case of a pullback. If we do push higher, watch out for resistance at 324, and above 324, watch out for 328. If you start closing candles under 319, watch out for support at 317.45. We can run a test to the top of that consolidation range, which is at 314, and which is also 100 SMA in the daily charts. If he starts closing candles under 314, watch out for 310 and 307. For now, SPY and QQQ are in a short-term uptrend. Play the trend until the market tells you it wants to sell off. Trying to call the bottom or the top is not worth it, especially if you're a trader. As always, take high probability trades, manage the risk wisely, leave a like, subscribe, check out the Discord, check out the Patreon, link is down below in the description. I'll see you guys in the next one.